Ladies and gentlemen, welcome back to another crypto market update. Today is Friday, beautiful Friday, take profit Friday, perhaps potentially. We are seeing, again, just more insanity from the markets, guys. It's just been a beautiful week. It's been a beautiful week, a beautiful, victorious week. And of course, it's just been good, right? As I talked about yesterday, it's that nice time in the market. Now, we do have some potentially warning signs. We always want to be cautious. All right. But at the same time, there's always been an element in crypto of diamond hands. All right. And the more I have spent time trading perpetuals and futures and making my money, I talked about this in yesterday's video, the distinct difference between kind of the mentality and the trading habits that you'll pick up when you go into perps and futures versus the mentality and the trading habits that you'll pick up when you're trading spot crypto. And they're very, very different. Whereas the first will reward you for making quick, decisive decisions, usually being in and out and really waiting for catalysts and specific opportunities to pull the trigger. That would be perps and futures. Trading crypto spot, on the other hand, really rewards patience and foresight and diamond handing. All right, that's really the only way you can turn 100 into 100K or more. And so with that, we're going to look at all the data. We're going to look at all the evidence today. And I just want to wish you guys a happy Friday. As always, make sure above all others that whatever you're doing, that you are continuing to regularly allocate funds to your stable basket of investments. All right. You want to be building a long-term portfolio for wealth creation, regardless of if you're actively trading or not. So make sure that you are consistently purchasing things that you believe will be around when you want to retire and that you think provide value and good things to the rest of the world. So high yield indices, all right, good basket of indices. And then, of course, Bitcoin. All right. Like those are just the top recommendations. All right. So let's get into today's market update. Let's get cracking. All right, looking at our market dominances, as we can see, Bitcoin currently sitting at 59.68. This is a drop of about a quarter of a percentage, so 25 basis points from yesterday. We do see that, so again, just a mild shedding, right? As we see, we talked about this yesterday. Bitcoin hitting that kind of 60% market dominance, and a lot of people had hypothesized, me included, that was potentially when we began to see the shift from Bitcoin into altcoins, and potentially the beginning of alt season, which the last couple of days, of course, couple of days do not an alt season make, but the last couple of days are promising, especially when we looked at specifically what that money was rotating into, not just broadly altcoins, but foundational protocols like perpetuals, lending and borrowing, liquid staking governance tokens, yield farming. So all of the kind of foundational platforms that other projects are going to be built upon, launch pads, for example. So all of that was very heartening to me. So Bitcoin continuing to shed a little bit of market dominance, and we can see all of that really going into Ethereum. We can see that going into Solana. We can see that going into altcoins. And the beautiful thing is that we continue to see stablecoin risk off, right? So people are actively risking on, moving out of the stablecoins and moving into the more volatile assets. So Ethereum dominance is currently sitting at 14.06. This is a gain. Remember, yesterday we gained about 4% on Ethereum dominance. All right. Today we gain another percent. So Ethereum dominance is up since the election. It's up more than that, because we were sitting at what, 12.88%, and now we're sitting at 14.06%. So we've gained significantly in Ethereum. So, and this is a very significant move for Ethereum. All right, very significant move for Ethereum. So we see that going into it, that market share going into Ethereum. We see that market share continuing to go in Solana, which had already been on a tear, but mostly the tear on Solana is being driven by memes. All right. Pump fund ecosystem is one of the top one categories right now. So a lot of that is, but that's fine, right? I don't mean that as a slight. Identify what asset classes are doing well and chase those. Look for narratives in those categories. That's what you want to be doing. Altcoins continuing to see a modest rise. It is going to take altcoins quite a bit to recover. Looking at things like altcoin market capitalization, total 2. We do see that we're still about 30% off of our lows, although the last few days since the election have seen a nice rebound. And I do think that is a good, comfortable early warning sign. The only things we have to be concerned with right now is if we see something like 2021, where we nuke down to 30 or 40K, which I just find very hard to believe. Of course it can happen, but I think the bears out there and you know, they could be right, but I'm just seeing so many, not so many people. I am seeing so many traders that I think are LARPers, like post the bear case. And I find that very hard to see, because there is just so much momentum. There's so much enthusiasm in the market right now with the Trump victory. It's going to take a little bit more than a mild deviation to completely like stem and flow the tide of that, right? Like, who is going to be panic selling into a dump that would take Bitcoin to 30 or 40K right now when everyone is so excited about the horizons on the future? And again, maybe that is my bias talking, right? Maybe in 6 months, I'll look back and be like, well, man, we were so euphoric. Like, of course, but how can we be euphoric right now, right? Like, we're only at all-time highs. We want to make some actual progress this cycle is what we actually want to make. So I just find the bear case very hard to digest. I find it very hard to digest how we could actually just flip all of this like positive sentiment. As I say that, I just thought of something. Like, of course, the people who are really jazzed up about a Trump victory is only a little bit more than 50% of the population. So is the other 48% now like extremely bearish and like they're going to sell? That's a possibility, you know? I don't think, you know, you could divide crypto holdings like that. Crypto holdings are, most people who hold crypto are, if you look at Twitter anyways, seem to be very pro-Trump. So that's where we're at right now. Solana dominance at 3.72%. That's a gain of about 63 points. Altcoin dominance at 15.92%. Yesterday we had been at 15.90, so a modest gain of 2 points. Stablecoin dominance sitting at 6.63. Yesterday at 6.67, so a drop of 4 points as well. And again, most of the market dominance going to Ethereum, Solana, and altcoins, while Bitcoin shedding some as well. So Bitcoin de-risking, people continuing to sell off stable coins, and people continuing to flood into Solana, Ethereum, and altcoins as well. So very healthy, very good, I think, overall for the market. Yeah, looking at our ETF flows, we do see the most tremendous ETF flow, single daily ETF flow, period. So here we go. This was, of course, yesterday. We saw $1.373 billion in daily inflows yesterday. This is the largest single daily inflow for Bitcoin ETFs. Now, we do see that the lion's share of that, the absolute lion's share, 1.119 billion, went into BlackRock's ByBit. Okay, with of course the runner-up being Fidelity's FBTC at 190 million, almost 191 million, and then we have, you know, various smaller amounts going into Grayscale, GBTC, ARCs, and of course BTC. Excuse me, not BTCO, but BitB. So just great. Now I do want to contrast that. This is good, and it brings back kind of the warning that I talked about. Right? Remember. Bitcoin ETF is retail volume, and we do want to be cautious about a huge spike in volume marking a local market top, because again, we see volume come in staggering amounts in three areas of the market to pay attention to. It comes in at the end of a movement, i.e., we have euphoric buying at the top of a bullish trend that usually marks a market top or can mark a market top. And then we have very panic selling into the bottom of a bearish movement. That's usually a bottom. And then we have initiation, big volume when a big move is happening. And so obviously to get a big breakout, price has already been going up a little bit. So it can be difficult. And by this, I mean like sometimes not possible because you're trying to predict the future. It can be quite difficult to figure out the difference between, is a huge spike in volume when price has been going up already and is that resistance? Is this a top? Is this a sign of a top? Or is this a sign of a true breakout and a shift in trend to radical bullishness? So we will only know, of course, looking back, but of course I am putting my chips on the fact that it's bullishness. Now I do want to, so here we go. Let's go down and look at the date range. So if we go to the daily, again, we can see that this is the largest single daily inflow day recorded since the Bitcoin ETFs opened up in January of this year. It is important to note, however, that does not give us the weekly maximum. Now, of course, we'll have more data on this as the way that this chart culminates may not be fully up to date yet. But it is not yet our biggest weekly inflow. I mean, we're only in like the 50th or 60th percentile of inflows because our biggest weekly inflow was 2.57 billion. All right. And so far this week, we're only recording about 134 billion. So again, impressive, nice. I mean, the trend here is very nice. Look at all this weekly volume that's come in over the last month. Very, very heartening to see, because of course we have the initial launch of the ETF. Okay, fine. And then, we just kind of doldrum. We have a nice spike here in June, but overall nothing super impressive. But then the volume coming in over the last month has been quite decisive. And if we just look at if we just look at the price of Bitcoin and its response, I mean, rallying up into this big surge of volume, very beautiful to see, going sideways, going down, and then surging into this volume as well. So we do want to see this nice trend continue. We want to see prices continue to put on some performance, and it's okay that we've seen things going sideways. I talked about this yesterday. It's okay to see Bitcoin's price going sideways or even pull back a little bit. That's completely fine, as long as we're continuing to see other assets go up as well. So we do want to see Ethereum, we want to see Solana, we do want to see altcoins continue to move up while Bitcoin stalls out, which is exactly what we've seen. What we want to be concerned about is if everything pulls back significantly at once. So we'll look at the chart here in a little bit, and we'll look at more specific price points where you could begin de-risking or taking risk off the table and waiting for a cheaper opportunity to re-enter if we are indeed going to get some kind of a pullback. All right, let's look at capital rotation throughout the cryptocurrency markets. Again, another heartening day, because we see that perpetuals, derivatives, DEX aggregators, launch pads, liquid restaking tokens, oracles, the EtherFi system, liquid staked ETH, these are at the top. So we're starting to see capital rotate from predominantly meme coins, which had been completely at the top. And we're starting to see that capital rotate from meme coins into more legitimate projects. Now, this in no way, shape, or form means that meme coins are dead, although potentially this is an early death knell for meme coins. But of course, this is just over the last 24 hours. If we look at the last 7 days, what's been gaining the most over the last week? Layer 0, perpetuals, the pump fund ecosystem, launch pads, derivatives, and AI memes. So AI memes and pump fund memes, definitely up there. Elon Musk inspired memes, overall very good. But today, we see perpetuals, derivatives, DEX aggregator, and launchpad at the top. And perpetual and derivatives have a lot of overlap. So if we just look at the most 24-hour volume, we're going to see projects like Arkham, Avo, Apex, Didex, Woo, GMX. Of course, this is great. If we look at 24-hour gains, we see more novel projects like Adrena, Zeta, Fulcrum. Let's see here, Cryptic Finex, MetaVault Trade, Saki Swap, Contango. So it's good to see, as I said, this is heartening to see capital flowing into these really important protocols that incentivize and allow greater economic activity on top of them, whether it's token creation or increased speculation. So I'm loving that we're seeing launch pads being consistently at the top for 2 days now and up 40% in a week. Launch pads are very critical because this is where money wants to go to find new launches. We're done with the days of unsolicited ICO emails. We want to put our money into a launch pad and get guaranteed allocation in each project, which is that Selenium plug that I dropped yesterday. So launchpad, and then derivatives and perpetuals, of course. So we want to see people are looking for a place to park their spot, USDT, USDC, Bitcoin, ETH, so they can speculate on new launch projects and get that 100, 200x. But we're also seeing money flow into the perpetuals and derivatives so that people can lever up their trades when they do identify a winning pig. So this is all good. I mean, this is good stuff to see. I'm very happy about what I'm seeing in the markets. This all looks quite healthy to me. I'm pretty happy about this. So again, we do have the leaders in the perpetuals. Let's look at the leaders in the derivatives as well. There is quite a bit of overlap if we rank by 24-hour volume, but Drift Protocol, just a big shout out. I spoke heavily about Drift Protocol to everybody in my private community, told them to go out and farm and get Drift allocation and get the airdrop and all this stuff. And we did. So I'm still a holder of Drift. Drift is going good. It's up 197% in the last week. Big gains from Drift, and I think we got a lot more to go. I put Drift right there with Parcel. I'm very, very bullish on both of those projects. Arkham, Pendle, Didex, Woo, Synthetics, UMA. I mean, this is all beautiful to see. If we just look at 24-hour growth, we can see Oikos and Dafi Protocol. No, we're going to take Dafi Protocol out because that doesn't have enough volume. But Oikos and Fulcrum and MetaVault Trade, those are definitely ones to keep your eye on because low market capitalization and definitely have the opportunity to grow. Yeah, I would avoid this Dafi Protocol. This is garbage. Yeah, capital rotation that I'm seeing right now in the markets is pretty healthy. Let's get to Bitcoin. All right, Bitcoin's weekly candle still looking quite healthy. All right, We are still trading above the fast guppy band. We are still trading above the slow guppy band. The fast guppy band is trading above the slow guppy band, so just full bullish confirmed. The interaction between the fast guppy, the slow guppy, as well as price action and the guppy bands indicate nothing more than a healthy pullback retest of pivotal support in the range of the 55 weekly exponential moving average, and us finding that nice level of support, indeed even putting in some regular bullish divergence and pushing on up. We are attempting to close above our previous all-time high with the current weekly close. If we can do that, again, I'm very confident in my call of the move to 80,000. However, my more moderate price target is going to be between 87 and 91,000. This is where I am going to be interested in kind of seeing kind of some of the enthusiasm of the current move wane off, and then potentially be looking for a more serious pullback if indeed we are going to have one. However, I want it to be a nice healthy pullback. I'm not looking for any 30 or 40% down right now out of the gate. I do really want to see Bitcoin and crypto charge right now. I want to see progress be made. I want to see the progress be made. I'm not into these, small little ditty things. I want to see some progress be made. This is all. I'm not asking for too much. Show me the money. Show me the money. So weekly continues to look healthy, especially if we can, as I mentioned, close above previous weekly resistance. The daily looks quite healthy as well. Again, we have had 2 days of indecision candles, and we are trading above the upper boundary of the fast guppy range. So areas to keep in mind here if we are going to have a daily pullback. A very nice, easy pullback would be a pullback to about 72,000, which would be very nice. Basically a pullback. Retesting previous tops, testing previous supports, and then continuing on. I wouldn't be super happy with that. I'd be pretty grumpy about that if that happened, honestly. Like if this is it, like if this is all the progress that we're going to make, I really do. I mean, with all the enthusiasm about Elon Musk and Donald Trump, like I really think we should be able to hit, 90,000. Like, come on, what are we doing here? Our daily momentum oscillators are confirming this as well, because we have crossed and rolled back into the bullish control zone, and we are nowhere near overbought status. Volatility as well has been trending up. We are nowhere near critical high peak volatility, so we should have enough in us for 2-3 more days. So hopefully next week is nice and positive, and we just get some nice, I'm hoping we run over the weekend. That's really what I'd like to see. DPMO confirming all this as well. Now, the 4 hour, we did reach overbought status here. Okay. Now remember that when we're in a really strong bullish trend, we'll usually get multiple sell signals, which is fine. These are here so that you can discretionarily take profits. But we'll usually get multiple of these sell signals, and it's usually when we start to get a couple of these followed by regular bearish divergence is when we want to consider shorting or fading the movement. But so far we don't see that. We are trading nicely on the 4 hour at the upper range of the guppy boundaries after a nice volatility reset back down to here to about the 50th percentile, and a nice reset of time transformation into the bullish control zone. So still very much primed for a nice weekend breakout right here. Bitcoin just wants to make this nice move above 77,000. I'd be very, very happy to see that. On the 4 hour, where could we see some pullbacks? Well, about 75,563 would be that kind of first level that I'd be watching out for. That's where I'd want to be more aggressively bidding. Of course, if we do kind of come down here, our CM Gann swing high low support is coming around 74,260. I really like if we're coming down here and not bouncing, then we probably want to be just taking profits and shorting below these levels, because we're not exactly sure where price is going to end up. I'm all for like diamond handsing, but as always, like diamond hands, when I see a pullback, a pretty severe pullback happening, I want to get out of my position, and then just have you have to then have the conviction to swing back in with the full position size when you get the next continuation signal or when you get a bottoming signal. That's the risk that you have to take. All right, diving down a little bit more, if you wanted a slightly more conservative look, we've maintained hourly momentum throughout the entirety of the election result, and throughout we can just see us coiling up nicely. This to me looks really good and healthy, and looking far more breaky outy than pulley backy. Those are professional technical terms. So this is all looking quite nicely. Again, we can see volatility in the lower boundary right here. So we did reach critical low volatility right here, and we are trending upwards. This is quite nice. The overall direction of the trend is to the upside. So we would be looking for a nice breakout again here to the upside, and prices moving above 77,000. That is what we want to see. Of course, if we do see an hourly breakdown below 75,271, again, we haven't seen that throughout this. We haven't seen that yet since the election and prices started pumping. So again, that's your early warning sign. We get the hourly close below there. That's fine. De-risk, maybe take some profits, because this is what happened the last time that happened, right? And again, remember, The pattern is always this. Once price closes below, you want to wait for the next rally to sell and fade. It's almost never straight down in every situation. Like here we go, see price dump, right? But you don't want to sell it on the way down. Okay, wait for price to come back up. Sometimes it comes back up to the guppy, sometimes it just comes to resistance. But either way, lock in your profits, fade if you want to, and then load up the 4-hour bottom feeder or the daily bottom feeder to find out where you want to be buying back into the market. Whoops. Okay. All right. Hourly Mink strategy here has just been bonkers. We got the initial long signal here. Got the continuation long, take profit, long signal, take profit, continuation long, continuation long, continuation long, take profit just now. So Minx is flat now after catching 1, 2, 3 successful legs of long trades. We have now traded below the hourly 200 Hall moving average. No short signals yet whatsoever. So we do want to be seeing, we are sidelined now for our hourly strategy until we see a price break above 77,192, coupled with our oscillator flipping back up to the upside, which it does seem to be in the process of doing right now. So we'll be waiting for that signal, or we'll be waiting for the hourly short signal, and we'll trade that as it is. Pretty simple. So thank you guys. That's about all I have for you guys today. Thank you for joining me for another crypto market update. We will be back on Monday with our daily videos and potentially looking to do a longer live stream next week where we answer questions. That will likely be on a Friday. So we'll look to live stream next Friday. That way, where we'll take super chats and answer questions and do live Q&A, maybe some live trading in the derivatives account on ByDFi. Which reminds me, if you guys are looking, if you're North American, if you're in America, if you're in Canada, and you're looking for an exchange where you can trade leverage futures, where you can have leveraged coins, where you can have 0% spot trading fees, and you don't want to worry about KYC or VPN use, then definitely check out ByDFi. It's my exchange of choice and official partner of the channel. Link in the description, where you will get access to VIP level 2 fee reductions, as well as any special promotions that I run for my community. So thank you to ByDFi for providing the opportunity, and make sure you check that link in the description if you want to take advantage of that. As always, if you guys enjoy the content, make sure to like and subscribe. It helps get this video out to more people who need the help, right? There's a lot of money to be made this cycle, but I've been doing this since 2017, educating people on how to make sure that they can actually preserve the wealth that they make in crypto and that they don't fall prey to very common mistakes. So thank you guys for your continued support. If you're serious about your trading and you want to enroll in the Crypto Trading Academy and learn to build your own systems-based trading strategy, link for that is also in the description. Thank you guys. Have a great weekend. Trade safely, and make sure you guys go out and touch some ground. It's been a crazy couple of days. So cheers, guys.